Okay, this is somebody in the Google Plus Goldbug site there, Terry Kinder, was asking me. Well, he wasn't asking, but he said it was air traffic control situation on this chart. So I'm trying to replicate the chart that I posted. I kind of deleted everything, so I guess I'm going to have to just throw in these lines again, replicate what I was aiming at. Of course, I am thinking that it's getting like a nice time to buy it, right? But I was just trying to identify the obvious trend lines here. But of course, the way that chart was constructed was basically taking advantage of every support and resistance I could find and looking for these micro pivots. Of course, they look like micro pivots on this chart because of the way this chart is so zoomed out. But the one thing I do like about this chart is that it's on close. So there's no candles on this. If I turn the candles on, it's going to look like this. And once you see that, you're going to wonder why you didn't buy this spike. And that's probably going to get under your skin. At least it does mine. So if I just trim off all the wicks, see, the wicks can be a little bit annoying. Of course, here's a classic top bottom where the buyers came in and drove it back up. But if you just look at close, you see the same thing. But when you look at close, you can see the actual tops become bottoms and bottoms become tops because, of course, it doesn't always happen, right? Because when it punched through here, it probably did bounce off this top on a, on a 1 hour chart or something. This is a daily chart going back to May 2010, so you're going back 3 whole years here. So this is like a big deal. And psychologically, we're below $20 on silver. There was a guy at the bank one day, and he said, of course, this was when silver was $30 an ounce, and he said that I'm buying gold. And I just thought, really? You're buying gold? Wow. Okay. As long as you didn't buy it here, see? And somebody on another, I posted a video and somebody said that hindsight was 2020. Well, of course, that's how we're making money, right? So I'm going to look for the support levels, and down here is a key support, right? Of course, if I turn on the candles, we punch through it a little bit. Now people want to get all Fibonacci and all critical and put their little calculator in that little wick down there, but I'm just looking at the broad view. So I'm just looking at the mass of structure, and like for instance, here is a support area coming into this. But I'm a scale trader. If I was trading this, I'd start buying here. I'd buy all the way to here. I'd put a stop down here at $12. And just walk away. That'd be a position trade. If I go to the weekly, of course this broker's not giving me much back data here, so that's kind of, I guess I didn't pick the best broker for the explanation. But here's the weeklies coming down into the, of course this definitely is going to clean up the top bottom situation when we go to just a line chart, and you can see just the tops become bottoms, bottoms become tops. As we go walking down this, let's take all this crap off here. This is my theory. It's viable theory. Bottoms become tops, and tops become bottoms. Of course, not to the penny or the pip, but in the window. I would say in a top bottom window, right? This is nothing. This is no PhD stuff here. Pretty easy. Very simple. Okay. Here's a top on the weekly. That's all you need to know. You just don't need a candle. You don't need all this fancy stuff. But it is nice to run the candles and all that. But I turn the candles on and off, give myself a break from all that candle drama, all that romance. And here's the candles, okay? Gap open, blah, blah, blah. It's bullish all week, blah, blah, blah. But are you selling here? Are you selling at the pivot? And you buying at the pivot? So we're coming back into a pivot now. And I would say if you're going to do this, pick out the hammers and the dojis for your trend lines. Stay away from the wicks, because the wicks just aren't the truth. You know, these are scalp trades here where you're buying for this bounce. You know, hopefully you're not getting your stop, like say you bought silver and you know, you were on this one, right? You bought, trailing stop got hit. Okay. You bought, you know, hopefully your trailing stop got hit here, you know, not hit here. Like you didn't get out when it was here. I guess so, right? You're a long-term trader, so your stop was here, and they clipped it, and they ran it up. So you want to buy these wicks. If you're going to be a candle trader, I say buy this wick. Be a wick trader if you're a candle trader. If you're going to be a market timer, I say go for close and just you know, candles be damned, hammers be damned, dojis be damned, and full speed ahead. But this is the market structure on the weekly. Hindsight's everything. Let's put some more support resistance in here. This is a major pivot. Big deal here when it just does that little soft move there. That's a doji or a hammer. So you can put right there. See how precisely just below the psychological handle of $20 an ounce we start to see the market collapse into this major support zone down here. I put an order on every one of these handles pretty much. Right here, it's major top, becomes a bottom. That's a failed bottom there. I mean, it's come through, but I'd certainly be buying into that because I could put a trend line on that. You know. And then we get destroyed back into this. Comes back and finds support at that. Put on the candle. This must be bad data here. I don't know what ridiculous wicks shaved off there, but this broker is not exactly on top of the list of brokers out there. This is not exactly, you know, this is a premium broker or nothing. So, yeah, now, certainly I'm buying the silver here a little bit, buy a little bit, and just keep buying more and more all the way to 15 and put a stop at, well, according to this broker, you put your stop down here at these wicks, right at 13 an ounce. I think that's rigged. Yeah, market's rigged, all right. There you go. Okay, so, yeah, wait till they manipulate it down a little bit more, but the market's open right now, so this live chart actually. Let me take all this garbage off. Wait, this is a daily chart. Okay, we'll get back to the basics here. And that was just... But seriously, wouldn't you buy at 17? Isn't that a good buy? Okay, so let me just condense this a little bit. Take it out one handle. There's a good old bar chart before the candlestick people got a hold of your head. Yeah, that candlestick stuff's a little bit much. Get the Neeson book. Got like 20 candlestick books. I mean, that's actually I like the candlestick books because they're real big and really nice and pretty, pretty pictures. But yeah, we're coming into this major buy zone here. Come on, it's like painfully obvious. And of course, I'm sure they're calling for $5 an ounce by now, right? Go all the way back to 5, the starting gate, from 5 to 49. And 49 was hit on a Sunday night, and it sold off. I don't know if anybody was there, but I was actually started trading right there. Sold. That was a Sunday night, and it went down 1 week straight. That was Sunday night right there, but bam. So it was a total. Actually, the hanging man here. That's Friday's close. Here's Sunday opens and gives up about, I don't know, was that 5 weeks of price? Man. And then they came and bought it, bounce, 1, 2, 3. Oh yeah, ABCs and all that. You know. Yeah. All the Elliott wave stuff. I'm sure you could pile your belief systems on top of these charts, but for me, it's just a matter of buy low, sell high. I'm sure that you could make the argument for this being a C wave or a wave 3 of some type because it's the biggest wave. Of course, this was 2 here. And I suppose these are extensions and all that nonsense. But in the end, I mean, really, long-term people are certainly going to be loading up in here. This is going to coming back into this real controversial zone where all of this drama happened, and of course, if we take that out, yeah, maybe $5 an ounce, but I don't think it's going to open at $5 an ounce, or I don't think they're going to bid it down to $5 an ounce tomorrow. So I would just go to a 4-hour chart and delete all this nonsense because it doesn't really mean anything now. And I would look for the my timing on the line chart for my entry. Zoom out here. Try to find a reasonable, logical entry. I guess I'd buy right now. Look at that. I mean, come on. Here's a 1-hour chart. Zoom out. Okay. So there's a 1-hour chart zoomed out. Now we just go and throw a channel on that. See where we're at. And then see where the bottom dropped out today. Or I guess that was a few days ago. Okay, so this is my trade plan, is to buy here at the market and then buy more down here at 1861. And let me just go to the 4-hour chart so I can see where I'm at in this picture. And I can see that I want to buy here where this top becomes a bottom before we go up this whole ridiculousness here. But this is pretty an unsustainable sell-off here, and you're coming in to the end of the year and all that stuff and blah 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 and the jobs report and whatever. So this looks like a right place to get in on bounces, and maybe it comes down all the way here in this channel. Maybe it blows out the bottom. Maybe it just walks perfectly down here. It's been a perfect walk so far, and I noticed on gold the same kind of ridiculous perfect walk took place. So if I just go to this, zoom it out, and so we've been walking down a channel here on the gold chart. You know, if you could do Andrew's pitchfork on this or some nonsense. But this is not going to go on forever either, so I'm thinking time to start thinking about buying this stuff. At least spouses and long-term people, I'm sure, are going to be buying this stuff at these prices.